Hey everybody, welcome back to the channel. We are back on another episode of the Daily Recap. Today was an aggressive day in the stock market. It was objectively the worst day of 2025 for the stock market, and some stocks had their toughest day since 2020 and 2022. There's no way to sugarcoat it. It was bad. It was ugly. It was disgusting, whatever adjective you want. It was not good, and we're going to break down a lot today on why it's happening, how it's happening, if it potentially can reverse and we get back to the good old green days, or if we have to continue to swim in a sea of red. A lot to talk about. Let's get into it. Okay, so I think the first thing we should start off with in terms of today's show is kind of just getting into what happened today. And I think what happened today is emblematic of what has been going on for the past couple of weeks. We introduced this theory on not only the market open with Chris, but also I think I did a take on this in the daily recap number 2 about why the market really is tanking. And I think it's kind of simple when you look to it. You can agree with this thesis. You don't have to agree with this thesis, but at its core, it seems like the White House has chosen what they want to attack in at least the first year of the second term of President Trump. And that is interest rates. The way to get interest rates to come down, aka for the Fed to cut rates, is you've got to get people to buy bonds. Why do you got to get people to buy bonds? Because that's what gets the 10-year to come down. When the 10-year comes down, mortgage rates come down, the Fed feels more likely to cut rates because they think that the bond market is pricing in a recession because of a growth slowdown. You get the rate cuts, and then we get to live happily ever after when we get those rate cuts if we avoid a recession. And that's a big if. I think it is becoming very obvious based on the statements that I've seen over the weekend, based on President Trump's interview on Fox Business on Sunday morning, where he is basically getting very excited about the concept of interest rates coming down. And he continuously stresses that people cannot get rich until the cost of borrowing capital gets lower. In order to get the cost of borrowing capital to get lower, aka the Fed to cut rates, one of two things has to happen. Inflation has to come dramatically down. We get CPI this week. That's going to be very important on Wednesday. We'll cover what happens there. And then the Fed cuts because we don't need to have interest rates super restrictive if inflation comes down. If inflation does not come down, which in my opinion, over the next coming months, inflation is not going to come down that dramatically. It might come down a little, but not enough for the Fed to cut. Then you need growth to slow down. You need GDP to slow down. You need markets to at least be afraid of the volatility that is entering into the market. And I think that's what Trump is doing with these tariffs. Will the tariffs be successful? I have no idea. Will the tariffs actually meaningfully bring jobs back to the United States? Will it increase manufacturing? Will it allow prices to go down on consumer goods? I'm a bit skeptical about if prices will go down at all. I think prices actually will go up if we have tariffs. But what Trump is getting pretty successful at is making sure tariffs are a method to spark so much fear in the markets that people would rather buy the 10-year over Nvidia. And I know it sounds crazy. I'm gonna put a couple threads in the description that you guys can read on this for those that want to get a little bit more analysis about what's happening right here, because there have been some really good accounts on Twitter that kind of highlighted this topic over the past couple of days, especially over the weekend, because the idea kind of started going viral with a lot of people just realizing this is what the administration is saying they want to do. Either you believe in it or you don't believe in it, but it's happening. And it seems very, very likely at this point that the reason we're having the type of volatility in the stock market that we're getting is because the market is rightfully confused about what the hell is going to go on with tariffs. And they're confused about that because Trump's making them confused. And the reason Trump's making them confused is probably because he wants them to be confused, because he wants people to buy bonds to get rates to come down. It's a dangerous game. I don't know if it's going to work. I think Trump's playing with fire. My conclusion from this, which is I think the conclusion that pretty much a lot of people have come to, is I think this is not the time to short the market or go into cash. Now, if you want to do that and because you think there's another 10, 20% drawdown coming, then by all means, you have to make that decision. I think the time to do that was a couple weeks ago, not now. I think now, given some of the prices that we're looking at are obviously pretty aggressive, pretty ridiculous. We had a lot of stocks fall 10 to 20% today. I think those are either buying opportunities or opportunities where you say, okay, maybe I can sell some covered calls, generate some income against my shares. But for those companies to now go down another 30 or 40%, which would be the whole point of getting into cash and shorting and buying puts, I don't know how likely that is. I could be wrong. Maybe we have a 2022 type of year where things completely hit the fan. But I think there are more indicators than not that this is something that is going to reverse. Granted, if we get the tariff volatility to go down, which is a big if, we'll see if that happens. And if we can avoid a recession, then there might be a world where the Fed actually cuts rates. That's good for stocks, and they're cutting rates because of the growth scare. But the growth scare does not become an actual fear that is embedded within lack of growth in the market. And if that's the case, the labor market stays strong, the overall consumer confidence picture stays strong, interest rates come down, stocks can do well. Now, there's a lot of conditions to what I just said. If you don't believe in those conditions and you believe that things are going to get worse than better, then yeah, this is probably not a market that you want to participate in. I think there still are reasons why earnings growth is going to be strong. And as a result of that earnings growth being strong, it's hard to deny that some of these companies are just completely mispriced, in my opinion, based on how the market is treating them. Nonetheless, for those wondering what is the macro reason for why the stock market is coming down, I think it's Trump. I think it's the White House. I think it is the uncertainty around tariffs. It is not going away anytime soon, which is why we're probably headed for some more red days. Futures are down about another 1% after hours, and it's aggressive. It's pretty damn aggressive. There's nothing more you can say, but that is the macro reason for why the stock market is falling. And as a result, I think we're going to have to weather the volatility of the storm that doesn't seem to be ending anytime soon. All right, next up, let's talk about Tesla. Tesla had its worst day since June of 2020. It was obviously an incredibly aggressive day, and this day is not going to be a day that goes lightly for shareholders. I am not super heavily allocated towards Tesla. I have 50 shares, 51 if you count that one share in the back that Derek got me. It's like a physical share. Ironically, he got me that share at $183. Tesla's now at 220, or sorry, below 220. So I mean, he got me that a year ago, and Tesla at 215 after hours, getting very close to that same price. Down 15% on the day, down 3% after hours. It was, again, one of the worst days since 2020. What is going on with Tesla? Well, I think it's pretty simple. Not only are all the banks downgrading the stock because they are getting pretty tired of the lack of Elon involvement in the company, or at least the perception about the lack of Elon involvement. I think the brand's getting hit. The brand's getting hit aggressively. Just this weekend in New York, multiple people were caught ambushing a Cybertruck, chasing down a Cybertruck, trying to crack the windows. I think these people have lost their minds. Obviously, I don't condone it. I think it's absolutely insane. But the point is the brand's getting hit. The brand's getting hit because Elon's associating himself with Trump. Now, whatever you want to believe about Trump, Elon is your prerogative. But the point is, as a shareholder, you're looking at kind of like objective brand risk. I mean, a lot of people like to talk about Vlad and Robinhood and GameStop in 2021. We'll talk more about Robinhood in a second. And Vlad took a major brand risk with what they did with the buy button, and they spent 2 years of trying to figure out how to communicate what happened, and they lost a lot of customers, and they've been, vigorously gaining a lot of people's trust back after completely reinventing the company. But that was a brand image problem for a long time that Palantir had, but that Robinhood had. Palantir had their own brand image problems of like, is this evil spy company that's stealing all your data? Brand image and brand association is a very hard thing to build. Your reputation is very important. Once you lose it, it's very tough to build it back. And with Elon, I think FSD and robotics is going to outweigh Tesla in the long term in terms of what the story for Tesla is going to be. But in the short term, the brand's getting hit. Elon went on Fox Business today, and he did a live interview. They asked him questions about Doge and his relationship in Doge. And they even said, hey, point blank, is Doge creating a stress and strain on your other companies? And Elon started chuckling. It was a very kind of awkward chuckle. And he was like, yeah, it's stressful running multiple companies, but it is what it is. This is what I have to do. I want to solve waste and fraud in the government. I think Tesla's down because there's a lot of people that are just like, screw this. I don't care anymore. Elon's spending his time in the White House. He obviously doesn't care about my shareholder capital. He has enough money where he's not worried about the day-to-day fluctuations of his net worth, even though he's down like 150 billion in the past couple of months. And as a result, I think people are just giving up on the Tesla story right now. Do I think that's the right thing to do? I don't know, because quite frankly, Tesla could get hit pretty badly because these Q1 automotive numbers, based on what we talked about when it comes to European sales and then the overall incentives they're offering to people, which to me is a sort of desperation attempt to get people to buy more cars in the month of March to make their numbers, they're not going to look good. And even if they get high delivery numbers, the volumes or the margins are not going to be good because of the 0% financing that they're putting on a lot of these cars. So doesn't look pretty right now. FSD is still far away from becoming real. It happens in June. We have to see if that's successful on a like robo-taxi commercial scale, right? I use FSD every day. It's amazing, but there's not that many people that are paying $8,000 a year for the software. And then you've got robotics, which it's still far away, probably a couple years out, if that, and Elon's going to have to ramp up manufacturing in a meaningful way to be able to deliver hundreds of thousands of robots. So I think the Tesla story right now is a tough situation, and it's really hard for me to buy the dip. I want to have more than 50 shares, but every time I think of buying the dip, I'm just like, well, where is the bottom? When is earnings growth going to get back to normal? Because right now the company's not growing. Revenue is declining 9% year over year. And how are we going to get back to the point where Elon is focused on Tesla and not just Doge? And quite frankly, I am a fanboy of what he's doing with Doge. I think we need to cut government spend. It's just the trade-off is that the perception is he's not focused on Tesla, and maybe he actually isn't, which is causing some pain in Tesla. Maybe that's only a perception. We're going to find out over the coming months in terms of how Tesla performs as a company. But that's the problem with Tesla right now. And that's why Tesla had its worst day since 2020. Next quick topic, Cathie Wood. We don't talk about her that often because she's not making so many crazy buys or sells. They are public in her portfolio. I do look at them every day and I report on the ones that I think are really important. Today was a big one. Cathie Wood of the ARK ETF went shopping today. So she sold 5.46 million shares of SoFi. She sold a bunch of UiPath, a bunch of Block, ticker symbol XYZ. They just changed their ticker symbol. She bought Tesla, Hood, Palantir, Coinbase, Shopify, AMD, and Tempest AI. She bought 79,318 shares of Tesla, 152,234 shares of Palantir, and 269,864 shares of Robinhood. So she kind of swiped out SoFi to the tune of almost 6 million shares for Hood, Tesla, Palantir, and then some Coinbase, Shopify, AMD, and Tempest AI. Cathie went shopping. Let me know in the chat or in the comments if you went shopping. I did not go shopping today. I sold some covered calls on some positions, but outside of that, no shopping today. But let me know if you bought the dip at all in the comments. Next update is on Palantir. Palantir and Voyager, which is a global leader in defense technology and space solutions, is expanding their partnership together. So Palantir started working with Voyager, I think a year ago is when I made my first video. It was actually this time of 2024, around March 2024. They are expanding that partnership. This is the 5th deal in 7 days. We had 4 deals last week. This one is not a new deal, but it's an extension of an old deal. And so I don't know if Palantir is cranking up the PR machine again, but we are getting a lot more deals than we have gotten pretty much all of January, February. And it's starting to ramp up in March. President of Defense and National Security at Voyager says, our partnership is driving resilience into national security space by providing decision makers with critical information on operationally relevant timescales. We're developing an integrated solution, harnessing the power of AI with Palantir software stack and taking advantage of real-time radio frequency streams and imagery to perform space-based object detection, identification, classification, and tracking. Overall, good AI software implementation, particularly becoming an operating system for Voyager, which is like a true operating system based on how the deal is structured. Palantir, head of USG research, said, we are further extending the reach of our AI solutions from ground to space, a critical frontier where demands are intensifying as the environment grows increasingly contested, essentially saying, hey, our software can work anywhere. And in this case, we're working in space. So that was the update in regards to their partnership with Voyager. Palantir also got into the S&P 100 on Friday. They were already into the S&P 500. Robinhood did not get into the S&P 500. We'll talk about that in a second. But Palantir got into the S&P 100. What is the S&P 100? Well, they track 100 companies. They're a smaller, more concentrated index, while the S&P 500 is a broader and more comprehensive index. That doesn't mean they're leaving the S&P 500. It just means they're getting added to another index. And the S&P 100 consists of 100 of the largest and most established U.S. companies, all of which are also part of the S&P 500. These are typically referred to as blue chip stocks with high market capitalization and massive liquidity. Now, this does not mean Palantir is going to go to the moon. This does not mean it's like the S&P 500 where Palantir gets included in the index and they get all this momentum because now funds have to start buying them. Funds already have ownership to them. I think it might create a little bit more allocation from some funds because the S&P 100. What it really means to me is that Palantir is becoming a household name in the stock market, maybe not in the actual sort of American ecosystem, because like your average Joe probably doesn't know what Palantir is. They probably know what Amazon is. But in the stock market, if you look at Fidelity's top tickers traded on the day, or Robinhood's or Schwab, Palantir is up there with NVIDIA, Amazon, Netflix, Microsoft, etc. And so from that perspective, I think this is only more bullish because you're getting a lot more liquidity into the stock. You're getting a lot of people that are aggressively pursuing either buying or selling the name, which means there's the ability to make money or get a good dip if you think there's a good opportunity in the stock. And I think if the company can execute against the earnings momentum that they're guiding for, about 31%, I think they're going to get closer to 35% this year, there will be plenty of liquidity to make that name go much higher and increase the multiple. Palantir already is trading at a pretty expanded multiple. It was down 10% in the day, down 3% after hours. I said in the morning, if it can even hold $70, I would be proud of it. At this point, we're going to see it's $2 away from going below 70. We'll find out tomorrow kind of how that plays out. But in general, I think this is only net good for Palantir to get into the S&P 100. Now they just have to continue putting up the earnings growth to stay inside of the S&P 100. Okay, next update is Robinhood. Robinhood had a pretty crappy day, down 20%. And I know a lot of people are upset about this. I think, it's one of those things that I'm not that upset about because it's something that I've been saying many times when the market open, market close. It's one of the reasons I haven't gone that heavy into the dip. And the reasoning is, look, Robinhood is a proxy on the bull market and on crypto. if the bull market and crypto, which crypto, now we're down from 97,000 to 77,000 right now. Where are we at exactly right now as I'm recording this? We are at 77,400. We hit 77,200 at the lows. If crypto keeps falling, if the broader stock market keeps falling, you're going to have less trading volumes, less net deposits, less new users. You're going to have less of everything. Robinhood as a company and their growth prospects and their ability to become one of the most important financial institutions ever, I think is very intact. And I don't think that's going away anytime soon. And I think this dip is a great opportunity. As I said, the dip was a good opportunity at $40 because when you look at valuation metrics compared to the growth, obviously it is cheap. The question is, how much worse can it get? And the answer is it could still get worse. And the reason I didn't start buying when we dipped from 65 to 60 is because as I saw the market turning, it became pretty obvious that Robinhood was going to be a victim of high momentum beta stocks getting hit if the stock market gets hit. Now, if we reverse from the stock market, and we'll talk about some bottom indicators in a second, then I think Robinhood has a nice reversal and Robinhood can get more momentum as trading volumes increase. But right now, Robinhood is dependent on transaction revenues. And if those revenues dry up, it's going to be a tough burden for Robinhood to show sequential growth quarter over quarter. And it's also going to be tough for the market to say, yeah, there's a growth story here. If the broader equity markets, which is the majority of how Robinhood makes its revenue, are not in high demand and there's not a lot of liquidity. So from that perspective, it's very normal if you understand what the company is, if you understand why the company is positioned the way they are positioned, why they get so much momentum when things are good, and why they also have momentum to the downside when things are bad. In my opinion, it's one of those things where if you are buying Robinhood for the next 10 years, I think paying a $27 billion enterprise value is going to be cheap, given the execution, leadership, and innovation of this company. But if you're buying for this thing to go back to $40, I think it could revisit 25 before it visits 45, just by the nature of how markets can continue to climb to the downside. So from that perspective, we're going to get February metrics tomorrow. So we'll see how they did in the month of February, which I think they did pretty well. March is going to be a whole different question, given some of the volatility that we're experiencing. But overall, the reason why Robinhood's getting hit is because of how bad the equity markets and the crypto markets are currently turning out to be. One final thing on Robinhood, they did not get into the S&P 500. Williams-Sonoma, Expand Energy, TKO Group, and DoorDash got in. I have no problem with DoorDash. I don't get why Williams-Sonoma, which sells coffee machines, Expand Energy, which does oil and gas, and TKO Group, which owns the UFC and WWE, are the 500 most important companies in the United States of America over Robinhood, which has opened up access to investing to millions of retail. I'm not going to go on my rant. I already did a rant with Steve on Friday. You can watch that rant if you want to watch it, but I don't get it. But Robinhood didn't get into the S&P 500. Hopefully they get in the June rebalance. All right, last couple of headlines to run through for today. Today had the highest total option put volume on the S&P 500. If you look at a 5-day moving average going all the way back to 2020, it was aggressive. Now, when you get to those levels, everyone kind of gets bearish, which is what I mean by saying that, hey, maybe there are some bottom indicators that are popping up. Again, the nuance and the caveat to quote unquote bottom indicators is that many of those indicators never have the looming threat of a man who is constantly reinforcing tariffs. So we have to take that in consideration. But yeah, the fact that we have the highest level of total option put volumes on a moving 5-day average over the past 5 years is people are getting bearish. And if people are getting that bearish, maybe, just maybe, there is a chance that we are in for a reversal. Another indicator, the U.S. Fear and Greed Index was below levels of not August 2024 when the VIX was up and, like markets tanked for like an hour and then they came back. October 2022. Like we are in more fear than we had in October of 2022. Again, could that be a bottom indicator? Maybe. Could that also be just very, very aggressive levels of fear? Yeah, that is also what we're experiencing right now. Final couple headlines. The United States and China are in early talks for a Trump-Xi summit in June, potentially paving the way for a formal trade negotiation, sources told the Wall Street Journal. So maybe Trump and Xi Jinping are going to meet soon and potentially be able to resolve their tariffs dispute in June. Again, that's still about 3 months away. Kind of good news if that ends up playing out, but we're going to see if that happens. Zelensky wrote a letter today to Donald Trump apologizing about what happened in the Oval Office. They're going to be meeting together, and sources told Bloomberg about that. They're going to be meeting together in Saudi Arabia in a couple days. There's going to be a bunch of countries across the world. Ukraine will be there. The United States will be there. Obviously, the Saudi prince will be there. And they will be negotiating further talks on how to get to peace with other international allies and most likely signing the minerals deal, which is a good thing. That is likely a path forward to getting to peace, at least for the United States. The markets might interpret that as positive, but that's another thing that we've got going on later this week. HSBC downgraded U.S. stocks to neutral and upgraded Europe to overweight. They cite that the U.S. downgrade is due to market factors pricing in a mini earnings recession in early 2025, which is what a lot of people have been talking about when it comes to this growth slowdown. Again, that might be what Trump wants to see to get bond yields to come down. While the European upgrade is driven by game-changing fiscal stimulus in the Eurozone, especially in Germany, along with defense spending, also with shifting global trade dynamics. Basically saying, hey, Europe's cheap. The United States is still expensive, even with a earnings slowdown. And as a result, maybe you want to allocate your capital in different ways. Bank of America came out with a report today. The title of that report is "The Era of Humanoid Robots is Coming." They think there will be 3 billion humanoid robots by 2060. And they think Tesla, NVIDIA, and Meta are going to be the leading winners in the humanoid robotic space. And then finally for today, BlackRock CEO Larry Fink says that he is very worried, not only about the deficit, which is what he's been worried about for a long time, and that's why he's talking about data center partnerships, private revitalization, more infrastructure, etc. He's also really worried about inflation. And he thinks the markets are underestimating how sticky inflation is going to be. He is actually predicting a rise in inflation in the next 6 to 9 months. Tomorrow, we get the JOLTS data. I'll be live on the Market Open discussing if we have a decent amount of jobs that are actually open in the United States. And if anyone believes that we have that many jobs open in the United States, we had non-farm payrolls on Friday, came in at 150,000 expected, which was decent, right? That's why the chances for a rate cut actually went down. It went from 47% to 36% because we got a ton of jobs. Trump took credit for it, which is good, but it's also like, wait a second, if we have that many jobs, do we really need to cut rates, which is kind of the opposite of what Trump wants. So we're going to see how bad or how good the labor market is tomorrow. And then Wednesday, we get CPI. CPI is obviously going to be very important because we need inflation to come down. And if it doesn't come down, we're going to have to deal with a whole host of other issues in the stock market. All right. Thank you, everybody, for listening and watching. I'm sorry if this video was not necessarily the best with my voice. I'm a little bit sick. If you guys can tell, I tried to avoid it. My dad got sick. My sister got sick. My mom got sick. I don't even think I have any bloopers this episode. It was a little tough to speak in this episode. If you can tell, hopefully it came out okay. And it is what it is, dude. It's just been a crappy day. I woke up this morning and I felt something was in my throat. I know a lot of you guys are going to run with that one, but I felt something was in my throat this morning and I was like, I probably got a little bit of it. So hopefully you guys enjoyed the daily recap anyway. Tomorrow, we're probably not going to have a daily recap because I'll be traveling. I'll be on the plane. So we won't have it tomorrow, but Wednesday, we should have a daily recap as I'll be in a different state and I'll be at an event this week that you guys hopefully will enjoy. So thank you, everybody, for listening and watching, tuning into the streams. I love you all. I'll see you guys on the next one.